Wait, the Fed just held interest rates steady. No hike. That's supposed to be good news, right? So why did the Dow just crash over 1,100 points in a single day? Why is that the worst one-day drop it's seen in over a year? Something doesn't add up. And that gap between what the Fed said and what the market did, that gap is exactly where the real story is hiding. My name is Moon. I dig into where money is actually moving, not what headlines tell you to feel about it. And if you've ever looked at a no-change Fed decision and thought, okay, nothing happens today, this video is going to change how you read every single Fed meeting from now on. Subscribe, and if this helps you see the market differently, hit like. Here's the play-by-play. The Fed held rates at 3.50 to 3.75%. Held. Not cut, not hiked. On paper, boring. But look at the room. 3 Fed officials voted against the hold. They wanted a hike. That's a hawkish signal buried inside a do-nothing decision. And the market didn't just shrug it off. The Dow fell over 1,100 points, down 2.2%. The S&P dropped 1.5%. The Nasdaq fell almost 1.75%. Chipstocks got hit especially hard, sliding for a 5th straight day. Here's what people miss. This wasn't really about the rate decision, it was about bond yields. Even with rates held steady, Treasury yields rose. That's the market saying, we don't believe you're done fighting inflation. Oil prices spiked again on renewed Middle East tension, and that's reigniting inflation, fears the Fed thought it had under control. So bond traders are front-running the Fed. They're pricing in more tightening than the Fed has even announced yet. That's the real signal. The bond market moves first, and stocks follow. Here's why this actually hurts. Markets don't fear bad news. They fear broken trust. For months, investors believed the Fed was close to being done. This meeting broke that story. And when a story investors were leaning on brakes, they don't wait around to find out if they're wrong. They sell first and ask questions later. That's why you get a 2% drop on a no-change day. It's not math, it's a trust repricing. So what do you actually do with this? Stop watching the rate decision headline. Start watching 2 things: the dissent count on the Fed vote and where the 2-year Treasury yield moves right after. That combination tells you the Fed's real posture faster than any press conference. The Fed didn't move. The market moved for them. That's the game now. And if you understand it, you're already ahead of most people trading on headlines alone. Protect and grow what you've built. I'll see you in the next one.